May market momentum.
Well, as everyone knows, April was an absolute roller coaster with a drop of over 20% in the broader markets, followed by a very significant 20+% rally in very short periods. That momentum did carry into May, even though economic data stayed mixed, and overall volatility did subside from the Liberation Day extremes. Some of the sharp shifts in the soft policies, economic data like Philly Fed Index and consumer confidence that continued to be relatively weak during the month, we believe that actually led to some reduced political rhetoric and even some softening on the tones on tariffs. And the more controversial proposals in the big, beautiful bill are likely going to be difficult to pass. And that all fueled some rally across the market. And subsectors, geographies, and strategies most benefited from a general risk-on tone in the broader markets. But solid earnings from key AI names, that really helped lift the sentiment. Our Tech Achievers Income ETF benefited from the resumption of leadership in tech. And of course, the standout performer at Harvest this month was the Harvest High Income Shares ETF. HHIS owns up to 15 single stock covered call ETFs. In that ETF, the top performing underlying single stock ETFs were NVIDIA, Coinbase, Tesla, and Broadcom High Income Shares. Each of those were up north of 20% on the month. For those that haven't seen, there is a dedicated monthly newsletter for HHIS, and you can also access that on our website.
Policy clouds in healthcare.
So not everything rallied during the month. Within healthcare, the med tech was the bright spot as it rallied on improved trade sentiment. Some of the subsectors in healthcare, though, that had been relatively immune to the broader tariff policies, they came under meaningful pressure in May as renewed political headlines and policy uncertainty increased significantly. So look, political noise does come in and out of the sector at times, and we actually don't believe drastic policy changes are likely. The sector still remains sensitive to sentiment shifts. And just like we've seen though in the broader markets, that can change very quickly. I want to highlight that we did do several insights pieces, and we also did a video during the month outlining the longer term positive drivers against current valuations while giving more details on the current policy environment, and specifically also how in HHL we're navigating this increased volatility.
Bond market challenges.
So we talked about bond market vigilantes last month, and clearly the bond market also continues to digest policy uncertainty. Higher tariffs are fueling inflation concerns. Bond vigilantes are seeing more risk in the US given policy uncertainty. And on top of that, Moody's downgraded the US credit rating in May following Fitch last year. This has resulted in a very challenging environment and combined have put further pressure on longer dated bond prices. Although we do see longer term US government bonds as oversold on some of our technical indicators, any sustained relief rally really depends on clear inflation signals or perhaps a shift in the trade narrative. Even perhaps sufficient data to see the Fed re-engage in a cutting cycle, again, may inspire some relief. Also, we've published several updated insights piece on our website with more details just exactly what's happening in the current yield curve environment.
Sell in May, gains slip away.
If April showers indeed yielded May flowers for the markets, does the old adage, sell in May and go away, actually hold true? And the short answer to that is no. In fact, over the past decade, the S&P 500 has on average posted positive returns every month during June, July, and August. And July notably has also been the second best performing the month over that past decade and has not experienced a negative year over that time. Across subsectors, commodities, various bond proxies, we really haven't identified any meaningful patterns that are statistically significant. That said, the summer markets do tend to go through some lighter volume, which can lead to air pockets when moves can be exacerbated, both to the upside and downside. So May did remind us that markets can rally even when the economic data isn't great. With policy uncertainty, interest rate volatility, and geopolitical noise still in the mix, coupled with some summer doldrums that are just around the corner, diversification and generating income remain key tools for investors. Thank you.
Subscribe to Harvest ETF's Insights. Join us and stay informed.